the bulls in the world. That might be the biggest call I have heard, mate. That's a serious call. I love this.
And I think it's very, very reasonable, and there is precedence. A 14x move from here in market cap with what we're seeing fundamentally, I think is very reasonable. And that is the high end of what I'm looking at, but I don't think it's unfounded at all.
Welcome everybody to episode 3 of Trader Talks. In this series, I'm going to be bringing you a Market Wizard style type of show where we'll interview great guests. I'm a big fan of the Market Wizard series, and I want to meet and talk to some of the best traders I know. And I tell you what, I am pleased as punch to have with me the great Sawcruhteez today. How are you, mate?
I'm doing excellent. It's great to hear from you, and I really appreciate the invite and the opportunity to come on your show. It looks like you and Tone have been doing some great stuff since I've been around, and yeah, just really happy to be back and at 'em. So cheers to that.
Sawcruhteez the Phantom. I just before we get into this, man, I have to say that you've been one of the biggest inspirations to me personally. I'm getting nostalgic just seeing your face on camera, man. Like it just takes me back to the days of watching all your shows with the great Tyler Jenks. I've got your book here in front of me. This is not a paid promotion. I'm bringing this out because I love it. I found Tone in about 2007, and that led into finding Tyler Jenks, and it really changed my life. And then with that came you, and I was just the biggest fan. I had developed all my own indicators and alphanumerics, back in the day, but I hadn't released anything because you guys were doing it better than I could ever do it. And it wasn't until you left the space that I thought, all right, I'm gonna try and take up where Sock left off, just to carry the torch a bit, especially with the passing of Tyler. And so I'll always be grateful for the work that you've done, and I hope that you come back to the space. So this is it. This is your first show back. I'm grateful to have you on, mate. I'm gonna launch into a few questions. It always struck me. I just found out for the first time that you're a little bit younger than I am. I always assumed you were a little bit younger, but you seem to be so much more knowledgeable than I was when I started. And I just wonder, like, where did that come from? How did you find out about charting? Where did you get into analysis?
Well, that's a pretty long story that I'm definitely happy to share. But it's something that I had always felt an innate, strong desire to get into trading. And it goes all the way back to 2010 when I dropped out of college to play poker for a living. Online poker was booming. I was really spending all my time and energy on it, making really good money, meeting some of the top guys, moved out to Vegas, and my parents hated it. Obviously, they hated every second of it and gave me every reason why this is not going to be sustainable. And I heard them, but there was nothing else in the world where I could make even a quarter of as much money as I was making at that time playing poker. So their advice was really mostly falling on deaf ears because they're telling me to go to college and take out student loans to make 50K maybe in 5 years when I'm making more than that today working for myself. But I knew that this is not something I want to do for the rest of my life. There was no part of me that thought I was going to be a 50-year-old poker player, a Doyle Brunson or a Phil Hellmuth or whatever the case might be. I always did view it as a means to an end, and that end was trading. I, for whatever reason, had a deep passion for trading, despite I'd never made a trade. I had lived through 2008, the crash that was the mortgage crisis. And something about that probably really made me realize, wow, if all these people are losing this much money, well, that means some of them are making it. And I felt like in the maybe 20 years ago, to be a trader, you had to have a seat on a stock exchange. And I believe it was like $500,000 just to buy a seat. And then you have to have the capital to do the trading. So it was really something that was never available until the invention of the internet. So I think that's a big reason why I was drawn towards it, mainly because actually now it's coming back to me in poker that there is a very common saying that if you can make money in poker, you can make a lot more money in trading. That was something that people said all the time. And there was even a couple of people who went from being college dropout online poker players to killing it on Wall Street. And that was very inspirational to me. So as I was dropping out of college and moving to Vegas to play poker for a living, in my mind, it was to make up enough money so that I could revert my focus to trading. And my roommate at the time was graduated top of his class from Wharton. He was a really smart guy, and we were both kind of on the same page, working towards that. Um, and so yeah, I guess getting a little bit off track, but that was something I always wanted to do. But there was a long period where basically what happened in 2011 was the government passed a law, UIEGA, making online poker illegal for anybody in the United States. And it was basically like waking up tomorrow and Coinbase, Kraken, Gemini, every single one is shut down with an FBI notice saying, it's game's over. It was overnight that happened. Shut down the industry for years to come. I had no qualifications. My money was tied up in that. It took years to get the money back. I had to move back home in with my father, and thought that the dream of trading was never going to happen. That's when I was washing windows. I was going door to door. I'd knock on 100 doors a day, giving them my pitch to wash, see if I could wash their windows. Then I saved up money from that and got into insurance, opened an insurance agency, and figured this is as close as I'll ever get. I'm in the financial world. I'm dressing nice, going to work. My parents are proud of me. I own my own agency, and in my 20s, I mean, I felt like very, very successful, and that was as good as it was going to get. And I never even really thought about doing anything more than long-term investing in an IRA, that sort of thing, until Bitcoin got a hold of not only my mind but my heart. And then I woke up one day to realize that I'm working for this man that I have been trying to, in a system that I've been trying to escape from my whole life. And so that's when I really started to devote all of my time and energy to. I had to learn Bitcoin and I had to learn technical analysis. And I think back to your question about getting started, I think a big reason why I was more sophisticated starting out is because there really is so much that overlays from poker to trading. There are just so many corollaries that it really trains the mind to think about probabilities and equities and risk management in such a way that I think it gives anybody playing poker a huge leg up when they get into trading.
I've been to two financial summits now. I was in Bali and I was in Dubai as well. And I've never played poker in my life. So I have another question. This is off topic, but you said great trade, good poker players make great traders. Can great traders become good poker players? Does it work the other way around as well?
100%. And yeah, absolutely. Because the things that make you good at poker are the same things that make you good at trading. And it's something where 95% of the field are gambling. They are using the part of their brain, the chemicals in their brain that are getting them excited to gamble. And to actually get over that and to take a professional approach of like, I'm going to sit here and I'm going to fold 80% of my hands. I'm going to play for 2 hours and I'm just going to fold for 2 hours because I know that's what I got to do. I'm going to watch charts for a week and not make any trades. That sort of ability is something that you cannot teach. You have to absolutely learn. And once you have that ability, it can be applied to basically anything, and anything that has to do with gambling specifically.
That's very interesting. All right. So back when you found out about Bitcoin, and then you started to go full into technical analysis as well, I wonder what resources did you use back then? I know that the world is flooded with analysis now. I mean, even when you guys started back in 2007 and that 17 on YouTube and that, it was very different than it is now. I feel like there's unlimited resources now, good and bad. What resources did you use to learn about technical analysis and trading?
Yeah, great question. And the first thing coming to mind, absolutely, that I remember rolling my sleeves up, I'm going to see if some version of it is still there, came from Tom Vase's website. And that's why I think that him and I quickly kind of became connected, was because Yeah, it looks like if we go to tonebase.com and then there's a link at the top that says learn trading. And I remember I was watching his podcast on YouTube, and I really respected him because I felt like there weren't many professionals in the space at the time, um, and even fewer that had experience on Wall Street. So I really gravitated towards Tone and Tyler because of their experience in traditional finance. So I remember when I really decided that it's time to roll up my sleeves and learn this shit, I started at Tone's link, Learn Trading. Um, and it looks like it's still basically the same. Number one, everything starts with candlesticks, just memorizing every single candlestick pattern, and then going on down, support and resistance, chart patterns, indicators, overlays. It's all still the exact same stuff. And this is all very much, you can see the stuff I talk about today. It's all right there. Parabolic SAR, Ichimoku cloud. Um, these are all things that are right here on his site that really gave me a head start. I went through every single thing and every single book that he recommended and took notes on everything. And then from there, I went to his conference in Vegas. It was when I first met him. And I mean, I remember I was taking so many notes that he made a point to tell the class, like yeah, it's okay if you share your notes, like that's okay. That's kind of what I did too, is I went to a class and took really good notes, and now I'm here sharing it with you guys. So we connected pretty quickly there, and that is what gave me the foundation. Once you have the foundation of uh, technical analysis as a whole, it's never going to work until you personalize it. I've never met anybody that's read a book on TA and then just been like, oh yeah, I'm going to trade RSI divergences and get rich. You have to know it all. You have to learn it all, but then you have to make some tweaks here and there, maybe combine some things that make it personal. And that's the only thing that's going to work. So that was absolutely what gave me the foundation, is Tone, what's on Tone's website today, and then going to his class in Vegas. And then I did the same thing with Tyler Jenks' stuff, went to every single webinar and class that he had until eventually I was up there helping to teach it myself.
Mate, that is so funny. Your story and my story are mirrored. They're exactly the same. I learn everything from Tone. All the links for all Tone stuff will be in the description of the show. This is coming to you on the Financial Summit channel. This is a Tone Vase joint, if you will. But it just strikes me as hilarious, because I think that maybe we started it learning technical analysis at the same time, and the intellect of Sawcruhteez to be able to articulate it and absorb it maybe 2 years faster than I could, or 3 years faster. And I think of myself as a pretty smart guy. It just goes to show how quickly you picked it up. I'm blown away by that. I figured there was a decade prior to me starting that you started. That's incredible, mate. So tell me, when did you find out about Bitcoin? What year do you reckon that was?
That's another bit of a longer story.
We got time. We got time. I'm loving this.
We're sharing. So I actually had the opportunity to buy Bitcoin when it was under $1 in 2011. I remember it very, very vividly. So right after the government shut down online poker websites, how they were really able to do that was cut off the head of the banking partners. So it became that anybody could like launch a poker site, but nobody could get money from like a US bank account onto it. No matter how much you wanted to pay, it was impossible. And this was April 13th, 2011 was when that went through. And within a couple months, I mean, the whole space is as depressed as could possibly be. Imagine it being like after the FTX goes down. Everybody is panicking. They never imagine this happening. They don't have access to their money, nor do they have access to their ability to make a living. So it's just pure depression and skepticism and all that. And somebody makes a post on 2plus2, the poker site where everybody would communicate. It says, could Bitcoin be the answer to this problem? And the first reply was like, LOL, Bitcoin's currently trading at 86 cents to $1. That values it at more than like half of the currencies in the world. You got the Mexican peso that's only 10 cents a dollar. Like how, like you're freaking stupid if you think this internet money is actually worth 86 cents on a dollar. And that's about as far as I looked into it. And I don't waste any time thinking about everybody could have bought it sooner. And everybody has the same story that the first time you hear about it, you don't buy it. And you get interested the next time it comes around. And when it crashes and doesn't go to zero, then it's kind of like, oh, well, I wish I would have bought it then. Maybe I'll buy it now, type of thing. The reason why is that I really could have sunk my teeth into it. I was already a gold bug at age 21, 22. I'm a big conspiracy theorist. Watched the documentary Zeitgeist. Would highly encourage it for anybody that hasn't seen it. So I was fully as suspicious as anybody could be about our financial system, and I wanted my money in gold. I wanted it out of that system. And if I would have taken an hour to read what Bitcoin actually was, I would have gotten into it very, very early. So fast forward to 2013, and I am in Illinois. I'm training I was a financial advisor as well as an insurance agent. I did like annuities and IRAs, life insurance, auto and home insurance. I'm in Illinois getting trained to go open up the doors. And there's like a class of maybe 20 of us or so from all over the country, and a couple that I get along with real quick. And I find myself talking to them about Bitcoin. They hadn't really didn't know much about it. But I remember pulling out my phone and pulling up a chart and being like, pulling up the tulip chart and pulling up Bitcoin. And still, I was like, look at the tulip chart. Now look at Bitcoin and tell me that it's not the exact same thing, that it's not history repeating itself. Just tell me, because it was, especially the 2013 bubble, looked almost identical. So I was telling all these guys how fucking stupid Bitcoin is. And anybody that's buying in here is obviously the same person who would have been buying tulips at the top. And then 1 year later, us same people are meeting up at a conference in Phoenix. And now I'm telling them about how Bitcoin actually seems really, really, really interesting, and how it actually may be the way to the future. So that was kind of how I ended up actually getting into it, was again because of poker. A website, I believe it was Ignition Casino, was one of the first that set up Bitcoin deposits. And my friend who I was roommates with in Vegas, who was still playing poker, he showed me how to make a Bitcoin deposit by literally reading the address over the phone to me. Capital A is an apple, the number one. We get like 10 characters through it. I'm like, dude, can't you copy and paste this thing to me? So I buy Bitcoin and I send it to the poker site to play. And 6 months goes by and I look and I'm like, holy shit, if I just would have held this Bitcoin instead of playing poker with it, it'd be up like 500%. And that's what sold me on Bitcoin, was that run up in, I guess it would have been 2015, that it was actually being used. It was being used on Silk Road, and it was being used on poker sites. And this is type of stuff that resonates with me as this type of person I am.
All right. Everyone wants to know, in the last, was it 3 years since you've gone AWOL? 3 years, 2 years, 2.5 years, something like that?
3 years to the month.
Wow, have you still been trading in the last 3 months? It's the last 3 years.
Yes, absolutely. I've been spending much more time and energy on trading than I ever did when I was on social media. And that was one of the main reasons why I didn't have any plans on returning, because I felt like it was, it's just trading Bitcoin by itself. That brings up so much emotion, and it's just hard enough to do by itself. Adding in social media and like, say you make a losing trade, that's hard enough to deal with itself, but doing it like publicly really amplifies things. And taking that away really allows you to, instead of like posting this long Bitcoin setup, because I know it's what most people are going to like, just really zoning in on executing and dialing in the system that I've been using to trade. It really offered me a lot of freedom to do some different things that I wouldn't have been able to otherwise, and also just a lot more time and energy to just devote myself to that. So for the last couple of years, that's basically 10 hours a day, 6 days a week. Just been really doing everything I can to try to maximize on this opportunity in front of us.
Wow, that's brilliant. I'm so pleased to hear that. All right, final question before we get into what everyone's come to see, or your analysis on the macro of Bitcoin. Does any trade, good or bad, win or lose? I love this question. Stand out for you in your mind. Is there one trade? It doesn't have to be a large amount of money or anything like that, but does anything stick in your minds like that trade? Do you have or do you let them go?
Um, I try to let the bad ones go after thinking about if there's lessons to learn or anything like that, but I don't really let the good ones go necessarily. I try to remember those and remember what came before, so that when I'm getting chopped around, I have in my mind, okay, this could be what precedes a really good one. Um, but yeah, the single trade that I will remember forever is the one that kind of allowed me to quickly start doing it full time. And it was in 2017. I again, it was I was at the World Series of Poker playing, and everybody, all they were talking about was Bitcoin. Price was around 2,000. It just broke an all-time highs, and that's all anybody was talking about. And I had, like I said, been familiar with it for years, and now it was time. I'm going to jump in, and that's when I really got into tone stuff and all that sort of stuff. So I ended up entering. Let's see here. It would have been in the summer of 2017, June. Okay, yep. Let's see, is this correct? I just want to make sure I'm not misspeaking about anything. Yeah, so it was June, July. The price
17.
was 2017. I started buying around like 2,500, and then as the price went down to 2,000, I just kept buying. And what was happening was I was really learning about Bitcoin. I was reading the white paper and watching stuff on YouTube, and I mean, I was feeling the revolutionary spirit of the whole thing. And not only was I thinking it was an opportunity to make some money, but I was thinking it was an opportunity to actually get myself out of this system that I had found myself stuck in. So I irresponsibly entered but I was young and had no responsibilities really. So who cares? So basically went all in from 2,500 down to 2,000, and then got fully out at about 4,500 after it kind of topped around 5K. And then I was able to get back in around 3,500 after it made a nice bottom at 3,000. It was just like the most perfect technical analysis. It was pure beginner's luck too, because yeah. It's like you get in, you start trading a bull market, everybody makes money in a bull market, and it seems like, oh, all I got to do is draw a trend line and look at where prior resistance was. I mean,
yeah. Every 4 years, I'm incredible, absolutely incredible.
But I did manage to actively really catch these swings, which today I still like. If I was able to trade this upcoming bull market like I did back then, I don't think I will. It's a lot of the beginner's luck is not having too much knowledge too, or something like that.
Yeah.
So I got back in, and then around, I remember it was the S2X fork was coming up when price was approaching 7,500, and everybody was expecting it to be just like the Bitcoin Cash, where you buy Bitcoin, you wait for the fork, and then you sell the fork coin for just brand new free money. So I remember vividly the S2S, that coin was being valued on Bitfinex at about $1,500, something like that. And then they come out and they announce that project's off, it's just not even going to happen. And the price immediately tanked. And I was calculating, if it falls below $1,500, I'm buying everything as much as I can. And sure enough, it fell below $1,500, not for very long. That $1,500 premium fell down to $6,000. So I got all in and managed to somehow catch the top of it and Bitcoin Cash, because of at first Coinbase didn't release Bitcoin Cash to anybody that had Bitcoin on Coinbase. So I was one of those people. And then eventually when they did release it, I remember it was just like going to be a ton of supply coming onto the market. So I just said, all right, I'm out, and got out around that time. I end up selling my Bitcoin Cash at $4,000, like literally the exact high. And then I got out of Bitcoin around 15,000 or so. And then I also sold Litecoin above 300 because I just saw that Charlie Lee tweeted that he was selling.
Yeah.
So that is by far the best trade that I ever expect to occur. Just everything came together, and I was had the courage to pull the trigger because I hadn't had enough experience of touching the oven in the wrong way, you know. So that after that happened, I sold my agency and got into and just decided I'm doing this full time. I don't care. I don't want to earn US dollars anymore. I want to earn Bitcoin. And based on the experience I had of trading that bull market, I figured that I had what it takes, and I certainly still have plenty more to learn. And that's around when I came across Tyler Jenks and learned Hyperwave right around the right time.
Good on you, mate. That is bloody brilliant. If you're interested in Tyler Jenks' work or Tyler Coates' work, I highly recommend this book. Where can someone purchase this book right now? TonyBase.com?
Yes, I believe they can. I think there's a link there. Yes. It's on Amazon for those of you who prefer Amazon. It's also still on my website, alphaanalysis.io. There'll be a link there.
That'll be all linked in the description below. Tyler, I'm going to send this, Sock. I'm going to send this to you in Durango, and I want you to sign it for me and send it back.
My pleasure. My pleasure.
I want to have that one copy. All right, guys, we are going to take a short interval, and then we'll be back with more Sawcruhteez and charts. Thank you, guys. Welcome back to Trader Talks. This is the part 2 of the Sawcruhteez journey. I hope you enjoyed the first half. It was fantastic to hear where Sock had come from, how he got into trading, and his backstory. Now, the part you've all waited for, we're going to see what Sawcruhteez has to say on the Bitcoin market as it stands right now. I'm the most excited person here. I hope you enjoy it. Sock, take it away, mate.
All right. I've got a handful of charts that I'm excited to share with everybody today. And first and foremost is going to be what's, I guess, the biggest change that I have experienced with my trading since being on YouTube and being around the last few years is really committing to putting time in front of price. And this is something that I think gives me a really, really big edge. And it's a concept that I got from ICT, who is, I think, probably the best doing it right now for anybody that's wanting to learn, really commit the time to learning how to trade. I would really encourage people to check out ICT, Inner Circle Trader.
He's copying. He's copying some flack these days.
Oh, absolutely. He's very much in your face, and he gets a lot of hate. Absolutely, and it's all very, very unfounded as far as I'm concerned. He is incredible with the way that he will execute live right in front of you every day. And his stuff that he is sharing, I truly believe that he's one of the best doing it. I truly believe that, and we're going to see. He's signed up this year for the Robbins Trading Cup, which is a year-long trading competition that he's saying he's going to beat Larry David's record, Larry Williams record, which is like 10 times second place. So he's really putting himself out there, and I've gone through a lot of his stuff. I went through the full 2023 mentorship. It's like 40 videos that are hour plus long. I really sunk my teeth into some of the to what he's teaching, and it really has really helped me. And one of the main concepts that he talks about is putting time before price, and that is a concept that I think will really help everybody who's looking at price, looking at patterns, looking at setups, without first looking at time. So
Well,
that's what
just jumping in for 1 second. If anyone's watching this, I don't know ICP. I just saw a video the other day, an expose video on him. But regardless if he's real, regardless if he's fake, and this goes for everybody, for Tone, for me, for Sock, there's plenty to take from people either way. Like you have to build your own person as a trader. You have to build out your own character, your own habits, your own everything. So you can take things from everywhere. And if you love ICT, or if you love Tone, or if you love Sock or me or whatever, you're building, like with paper mache, your own trading ideology. And so even people who turn out to be fake or whatever, we'll see what happens in the long run. It doesn't matter. Their concepts can still be valuable. A lot of great traders from back in the 50s, you can read their books, they went bankrupt, but their ideologies were right, even if they didn't follow them themselves. So please continue, mate.
absolutely. And I guess not even meaning to talk about his concept, brought him up mainly because he's the reason why I have started to put time in front of price. And the person I want to bring up, I'm sure everybody knows, is Plan B on 2plus on Twitter. His stuff, I think, is the best stuff available out there. The models that he has come up with, I think, is the holy grail, as far as I'm concerned, for macro Bitcoin analysis, looking at it from a fundamental perspective as well as price perspective. And his one model that is probably the simplest is the one that I think is probably the most important. And that's his timing model that relates to the halving. And anybody that isn't very familiar with Plan B's work, go to Twitter, look him up. His pinned tweet is from like 2019, detailing all of his models. Really take the time to go through and learn that stuff, because I think he understands this market as good, if not better, than anybody else. And the model I'm talking about, I don't know what he calls it, but it entails buying Bitcoin 6 months before the halving, no matter what the price is, only the time, 6 months before the halving, and selling 12 months after the halving. So an 18-month trade where you buy 6 months before the halving and you sell 12 months after the halving. So that is my target for this bull market. I'm not thinking in terms of price. And this is a really big breakthrough for me, because in the past it was all look at the prior cycles, try to extrapolate what we're going to get to next cycle. And it never works. It never works. One of two things always happens. Either price will approach it and pull right up short of it. Like 100K seemed like a guarantee for last bull market. And I think I was targeting like 150 or something. And I mean, it seemed like a guarantee when it shot up to 60, 70,000 that it was going to 100. But nope, if you were waiting for that price, you're still waiting for it. And then what could also happen in 20.
Sock, you there, mate? Sorry, mate. My computer just restarted itself.
That's restart.
We're still recording. Oh, I'm sorry, I cut you off. I don't know if I come again. I'll edit that together there. Please forgive me. Forgive me. It just turned off. The screen just went blank. I don't know. Sorry, mate.
No worries.
Please continue with the stock to flow. I'll cut in here.
All right. So yeah. So that's how I'm thinking moving forward, is no longer in terms of price. Not like I want Bitcoin could get to, it could be 200,000, 300,000 for anything. I don't know. I could make some kind of predictive guesses based on historical markets, but that just never works for me. Every time price will pull up short, or it will smash its way through. So that's where I think it will be. Most people will be best suited to think in terms of a time that is guaranteed to come. So 12 months after the halving is guaranteed to happen. It's guaranteed. And whatever price comes is probably going to be much higher than I'm thinking now, and maybe a little bit lower than the big round number that everybody wants to see. But it's a time that is absolutely going to occur. And so is the 6 months before the halving. It's a time it's going to occur, and it doesn't matter what price is doing at that time. It doesn't matter if it's doing a descending triangle that's bearish or if the moving averages are all bearish. It doesn't matter. It's putting time before price. So that was kind of the first thing that I wanted to talk about.
I do, just to jump in for a second, I know exactly what you mean about time. I remember when, what year was it? Well, I can't remember, but Bitcoin went to about 14,000. This is about, let's call it 2021 or something like that. And then when we had the COVID crash, right? So in 2020, when it crashed down and it got down to 3,000, and I remember it had bounced back up. It was about $5,000, and I was telling everybody, buy Bitcoin, buy Bitcoin, buy Bitcoin at $5,000. But I wasn't saying it's going to go to 60,000 or anything like that. I had no idea. I said, but we're at $5,000 right now. We've been to $10,000 a few times. Do you think there's never going to be a time when Bitcoin goes to at least $10,000 again? We're at 5 now. Do you think that's an impossible? If time is not a factor, and everybody who I spoke to was like, yes, we could double our money in time. There's no, regardless of technicals, from 5 to 10, we're sure of this. So a lot of people doubled their money off that little suggestion. It was based on time, not on price, just that doubling.
Yeah, I think that's an extremely powerful concept that can, I really think, help people in crypto more than anything else, because crypto is so emotional and it's so volatile that all of us just have our heads zoomed in on this, like what happened today, yesterday, and the day before. Like there's like a 3-day sort of zoom that most of the market has that completely misses the forest for the trees, if I'm using that correctly.
Yeah, totally. Yeah.
There's such massive opportunity over the next 10 years in this space, and almost nobody's thinking 10 years down the road, which traditionally is like a pretty small time horizon for investments. And Bitcoin, that's like the longest anybody can think. And if we're thinking in terms of like 6 months before the halving, 12 months after the halving, halvings occurring every 4 years or so, and thinking about building literally generational wealth in 10 years or less, we need to forget about what has happened last week or even last month, because it's going to do one of two things. It's going to cause maybe one of 3 or 4 things. It's going to cause us to overexpose when we get overconfident, and then we're going to get scared and stopped out at exactly the worst time because we have too much risk, because we got too confident on the yesterday's support or whatever the case may be. And then if you're too zoned in on the intradaily moves, and then the last couple of days just skyrocket, we're up 30% in 2 days, it's damn near impossible to be taking profit because you're thinking about these last couple of days having moved so much, and you're not thinking about the last year that's moved so much. So I really do think that when we're in crypto and the price is so volatile and so much of the volatility is just noise, the further we zoom out, the more we get the noise away and are able to see these long-term patterns that have been very reliable. That it's once we see them, that doesn't mean we're ready to capitalize on them, because it's fucking addictive to watch these charts on a daily basis and try to trade with some leverage. I mean, that we're all addicted to that in one way or another, and getting over that addiction will greatly benefit everybody. And I think one of the best ways to do it is thinking in terms of time and just shutting price off. Literally, I want to ask the audience listeners, when is the last time you have gone a week without looking at the price of Bitcoin? 1 week. When's the last time you've done it? And if you're in this really for the long, if you're in this for the,
go ahead. Sorry, go ahead.
If you're in this for the long term and you're really investing for generational wealth, and you really are thinking 10 years down the road, you should constantly be not looking at the charts for weeks on end, because you should have an auto buy set up, and the intra-year price movements just should not even affect the chemicals in your brain. And if they do, it's only going to lead to bad decisions.
Yeah, I went an hour a few months ago. I went an hour without looking at the charts. So That was a few months ago, but I hear you, mate. I mean, no one's more addicted to leverage trading than me. I don't feel comfortable unless I'm leveraged to the gills and 1,000,000% long. You know, I feel more
Well, and that's the
uncomfortable out
thing
of a
is,
trade.
getting to that point, you have to be able to be leveraged to the gills in a responsible manner, where you're doing it professionally. You're not doing it because you want to gamble. You're not treating it like a casino. And to get to that point, you have to learn to control these emotions that everybody else is letting control them. And I really think everybody watching this that hasn't gone a week without following the price of Bitcoin, challenge yourself to do that. Challenge yourself to do that and just see what you experience, see what you learn a week later when you come back, if you're going to be more professional or if you're going to be more like, a little bit less anxious and fiending to see that price action, and then see what the chart will all of a sudden take on a different appearance to you. If you're not in this emotional gambler mind state, now the chart's going to look completely different to you.
Yeah, no, it's a fantastic call. I mean, looking at the same way you talk about looking at charts, you could put that for social media or porn or anything, like any of these highly addictive dopamine type of things. They're all the same thing. It's all the same thing in your brain. So Sock's totally right. Mate, take us through the charts. Let's have a look. What do you got for us today?
All right. So the first chart, I guess, is the Plan B chart that is
You can
looking
you
at.
can use screen share, brother, if you got screen share there.
I will, and that one isn't really a chart; it's just more a concept, and people should go back in their charts and backtest and see if it beats a buy and hold strategy. Because me telling you is not going to be as effective as you looking at when do these buys come 6 months before, when do the profit takes come 12 months after. Go back and look at that. So that's the main thing that I want to share is the time target, and beyond that, I've got some charts I can pull up here. Make sure I share the right screen. I think this should be it. Okay. Yes. Are we looking at Bitcoin market cap here? Are you seeing it?
Yeah, I've got the Bitcoin on the monthly time frame right here.
All right, excellent. So this is the Bitcoin market cap chart, something that I have been paying close attention to ever since February, right here. And you'll see why. These big round numbers, I think, are probably more important than people really even realize. And this is 1 trillion market cap. In the run up in 2021, 2022, we poked our head above 1 trillion market cap, but we weren't ready to stay above. And before, let's see here, we were in the range of about, on that last one, we got above 100 billion and supported that on that kind of 2017 run up. So I'm thinking that this 1 trillion market cap is very real. This is the ETFs demand, Michael Saylor's trade, countries coming in and buying it. Tells me that it is ready to really send it to the next level. And this 1 trillion mark is something that I've been paying attention to as it relates to other assets. Let's see, not what I wanted. Okay, I think this is what I wanted. All right, here we go. Let's see. So right now, the market cap for gold is 14 trillion. And the market cap for silver is 1.4 trillion. So right now, as we speak, gold is testing the market capitalization of silver, which is a huge deal in my mind. Bitcoin being worth more as a whole than silver as a whole that's like a paradigm shift. That's a complete game changer where the biggest players in the markets are going to see this as a real deal. Whereas before, at a lower market cap, it was not real to them. So seeing that Bitcoin is currently challenging the market capitalization of silver is tremendously bullish for me, and leads me to speculate, pure speculation. Again, I'm focusing on time, not price, but speculating that this market could test the gold market cap. The high, if Bitcoin gets to around 14 trillion on this run, that's something that I will be paying very, very close attention to, kind of thinking in the same sense, like it in this run, I think it's ready to take over silver and test gold's market cap, but probably not overtake gold on this run.
When you say, Stock, when you say this run, brother, what time frame are we considering this run to be?
12 months after the halving. So
wow.
The halving is
really?
Yes. And I think that is pretty reasonable. If I'm looking at about a 14x return of market cap in the next 12 months, we could, or 13 months, we can kind of look back. I don't know exactly. This halving was right here at 9,000. We consolidated in there for a while. And then inside 12 months, it went from 100 billion to over $1 trillion. So
that's the biggest of all the bulls in the world. That might be the biggest call I have heard, mate. That's a serious call. I love this.
And I think it's very, very reasonable, and there is precedence. A 14x move from here in market cap with what we're seeing fundamentally, I think is very reasonable. And that is the high end of what I'm looking at, but I don't think it's unfounded in at all. So yeah, I think that what I'm expecting is for gold to for Bitcoin to test gold's market cap. Well, here's the caveat that I got to make that is very, very important. So right now, the market cap is 14 trillion for gold today.
I was going to say that you're going to have the market cap for gold will be a hell of a lot lower if Bitcoin's going to go to match it. I would have to say.
I disagree. I think the market cap of gold is going to be a lot higher. So while I think that, and let me try to be as clear as I can, I think that Bitcoin could get to 14 trillion market cap on this run, on this in the next 13 months. That's the high end of the price that I'm think is very within reason. But gold is also making all-time highs right now, and you don't mess around with gold when it makes all-time highs. Kind of like Bitcoin, it moves when and there's every reason in the world for gold to make a really, really big parabolic multi-year bull run with everything that we're seeing in the world, with how aggressively they're printing money, and that's going to war is the perfect time for there to be demand for gold. So I fully do believe that gold's market cap is going to rise in the next year, probably enough such that Bitcoin getting to 14 trillion will still be some discrepancy, but the gap will be drastically closing in the following cycle. I do expect Bitcoin to overtake gold. Wow. And the main reason why I'm comparing these two markets right now is because after this halving, it'll be the first time in the history of the world that there's been a harder money than gold. First time in the history of humanity that there's been a harder money than gold after this halving. So it just is a matter of time for me that it overtakes the market cap. And this is the first kind of time when the market will actually be looking at it as better money than gold.
Incredible.
Okay. And then I just kind of wanted to compare Bitcoin to some of the other biggest companies, just to kind of wrap my head around how big of a deal it is to hit $1 trillion market cap. Only 6 companies on the stock market are over $1 trillion, according to Grok on Twitter. And it would put right now at 1.9 trillion is the 10th biggest economy in the world, in Canada. So right now, Bitcoin is challenging the biggest economies in the world, as well as the biggest companies in the world. And what are we seeing? These economies are buying Bitcoin, and these companies are buying Bitcoin. That is a paradigm shift. Okay, I have a quick timing chart that I found interesting that is along the lines of buying 6 months before the halving, selling 12 months after. Something that I realized that's kind of a coincidence, but also something that I'm definitely going to be keeping in mind is that halvings always come on leap years, which is whatever, 1 out of 4 years are leap years, and Bitcoin halves every 4 years. So it's just kind of fallen into this situation where leap years tend to be the best year to buy Bitcoin, or the best year to expect a bull run. And I kind of drilled in on daylight savings time combined with leap years. So looking at the daylight savings that follows the February 29th, and just kind of noticing like, wow, that tends to occur right before the halving, and it tends to put you in a really good time to start hunting buys, is this period between February 29th, and then the daylight savings was on March 11th. We see here, it's like right before the market really starts moving. You get the higher low, and it starts taking off. And obviously it's because of the halving, but this is just a little kind of timing thing that I'm keeping my eye on. Let's see here, move it over to 2016.
Yeah.
Very similar, kind of get the first higher low. And that's, I mean, it bottoms here, but I'm not interested in buying this sort of stuff. I want it to be calm after a storm. I want, the bottoms are going to be really violent, and I want to, you never know how far they're going to go. I want to sit back, sit on my hands, and wait for a little bit of a calm after the storm. So that's exactly right where I want to be looking to buy.
I bet if you did some analysis that if you bought in only once every 4 years, only in that little bracket that you've got there, and sold exactly 12 months later, something like a really interesting analysis like that, I think you get some really good returns as well.
Absolutely. And what you'll find if you do that analysis is that the 6 months before the halving is going to line up very, very closely with this time period. So for whatever reason, the 6 months prior to the halving is going to fall very closely in line with the daylight savings and leap year. So looks like we might have lost Matthew, but I think
no, I'm here. I can hear you loud and clear.
You're great. All right. So yeah, I think that that is something that it's basically going to be showing the same results as looking 6 months before and 12 months after, just a little bit more being able to predict ahead of time when exactly it will be, and given a more of a window instead of like 6 months to the day, like now, boom, it's all in, given like a window. Like I like to scale in. I don't really like to go all in at once. I want market to move in favor. I never average a loser. I want to scale in as it moves in favor like this. So interestingly enough, the kind of black swan COVID event that we had immediately followed the zone here. But this is absolutely where I was very, very bullish, and I was absolutely buying in here in anticipation for the halving. Got taken off guard by this black swan event, but price immediately rebounded. And where I ended up rebuying was this consolidation period that followed the halving. So basically right around the exact same price, which I just found kind of interesting. So that brings us to where we're at today. And here we have the leap day, and here was daylight savings. So I was kind of paying close attention to that. And the one main thing that I want to point out here that people may or may not be thinking about is that we have never ever had a halving occur at all-time highs. Never even really close. Every time the price is halved, it's been around 50% of the retracement of the prior all-time high. Let's see here if I can put in a quick fib. Oh, 1. There you go.
Well, just why you do that. This is the interesting part, isn't it? That this the fact that we're at all-time highs pre-halving, that breaks a lot of models, and it breaks them in a good way. Like, I love, like, models are as good as they can be until they're not. But when they're not and they're broken to the upside, that's when you can start to see some real parabolic moves. I think especially with like Fibonacci's and whatnot. So what do you think of that this means, that we're at the all-time high right now rather than being 50% below the all-time high pre-halving or something like that?
Yeah, absolutely. You're right that patterns kind of repeat and models work until they don't. And then when they don't, the question is why? Is it a really bearish thing? Is it a fundamental change that is bearish, that is causing market to accelerate in a different direction or more quickly? Or is it something that's extremely bullish that would then have that opposite effect of accelerating in a parabolic fashion instead of being more linear? And I think that the implications here are very, very clear. When we have 50% below the all-time highs, there's still a bunch of resistance from people who don't give a shit about holding through to new all-time highs because of a halving. The people that bought in here and are just desperately waiting to get out around break even or so, there's always built up resistance inside prior all-time highs from sellers that are underwater. And there's always going to be clear areas of support and resistance. Like, for example, right here, was support, turns into resistance. So not only do you have built up people waiting to sell when they bought here to sell here, you also have bears who are targeting prior support as resistance to sell. So you've got all this selling pressure. Let's see, let's go to, now you've got here, comes over, and so prices halved, but you've got all these sellers who are delaying the parabolic advance that follows new all-time highs. Every time you've got that sort of situation, whereas here we've already eaten through. I mean, there was a bunch of people who were underwater for sure, like every other time, but the difference is there's a change in the demand. The ETF was launched right around here, and right now the two highest volume markets in traditional finance are both Bitcoin ETFs, and there isn't even really a close third. The demand for Bitcoin through these traditional avenues is tremendous, so much so that it was able to eat through all of this, just melt right through all this resistance. So now what's the implications? There's a couple of really strong implications. First of all, these sellers are gone, and there's not resistance above prior all-time highs. There's going to be some profit takers, but that's not the same as people fully exiting positions as soon as price gets to like around break even or whatever the case may be. So not only do we have we eaten through all of this resistance with organic by volume. It's not manipulative stuff. It's organic by volume. It's eaten through this resistance. And then the other thing that happens is bulls are left behind. When we're below prior all-time highs, bulls are going to be doing what bears are doing themselves, is looking to buy prior resistance. So you have resistance. Now we have bulls looking at this as kind of, resistance that should send us down to buy prior resistance. That's what they're waiting for. Doesn't happen. And yet again, this move up, this to the highs, all these people that are wanting to buy and they're being responsible and they're using their models that have worked since 2013, they're left behind, and they're the biggest bulls that there can be. They're not gambling. They are believing in the value, and they're being patient, and they are just getting left behind. So that is when the FOMO sets in, and we haven't even gotten to the halving. So once the halving comes and the supply gets cut in half, and we don't have any built up resistance ahead of us,
who knows?
That's all I gotta say.
I mean, even looking at this, like we'll call it a model that you've got here, that cycle between daylight savings finishing and the leap year the bracket. In previous cycles, there's been a sideways consolidation, or in one case, a black swan event, but the rest of the time it sort of has had a bit of a, people love it when I say meander post that little bracket there. I don't even think we're going to get that, to be honest. I think this is a different realm this time. I don't think we're going to meander into the halving. I think we're gonna storm into it. That's just my personal opinion. What are your thoughts on that?
That is what. So let's see here. I want to get the exact prior halving date. Bitcoin halving, because I've been thinking a lot about how price reacted from the last halving, and how, and kind of using that to decipher what's going on right now. Let's see if I can find this without too much trouble. And if you want to try to look yourself, sometimes it can be long articles. Okay, 2016. Shoot. Okay, 2020, May 11th, 2020. Okay. Let's get back. Chart I have pulled up. Okay, May 11th, 2020. So let's just go ahead and put a line on that right here. So really, I think about this type of thing as a buy the hype, sell the news type of event, and then like kind of rebuy the dip. So we see that on the halving, we really didn't meander into it per se. We kind of meandered after it. The market moved from absolute low into the halving. It was up 100%, over 100%. And so it had really moved into the halving. And then after the halving happened, it took some time to consolidate. And that's when both bulls and bears lose money. It just chops around and takes out stops for bulls, takes out stops for bears, gets so tight that everybody loses their mind from frustration of just a sideways market. But it just halved, it's supposed to go to the moon, and now we have 2 months of just straight painful sideways action. So that's kind of what I've been thinking about as we've been starting to consolidate. Let's see, leave the halving is due for, let's call it 30 days. That should be close enough. Right in about here. So we'll say that here's the halving. What I'm kind of starting to think is that we could have that choppy action leading into the halving. Being that we've already had a big move up, there's been a ton of hype and has been ETFs and Michael Saylor and all this sort of stuff. The hype's already kind of been priced in. And I think that the market really needs to consolidate in a very choppy fashion around the halving, because it's such an obvious trade to buy around the halving that you either got to do it buy before or kind of wait until really tight consolidation after. I'm kind of starting to think that we could get that consolidation before, and then as soon as the halving occurs, then it really explodes. Very different from in the past where it will explode into and below the all-time high, and then it'll go sideways for a month or two, and then it'll be ready to really take off. I'm thinking like you, that this thing really already is ready to take off. The only thing missing is just some really nice prolonged chop that really frustrates both bulls and bears, and really takes out all leverage positions that are, using over like 5x or something. That is what I really want to see around the halving before it is ready to take off. So maybe something like, let's see. What's going on? This is not what I wanted. So I can pull up a bars pattern. Bars pattern there. So if we're looking at maybe something like this, really makes a lot of sense to me. really, if we kind of take these new highs after this little dip, I think everybody's going to be fully expecting it to just moon right away going into the halving. We're getting so close to the halving that since it's really started to slow down, I think yeah, it absolutely could move from here and just shoot. Absolutely, why not? It absolutely could. But what I'm looking for is, while everybody's expecting that, really sloppy, choppy action going into the halving, and then once that halving does cut in half, and there's still all of this demand organically, then seeing another one of these, but even probably more so as it accelerates into a more parabolic move. I would think it would be accelerating up off of that. So that's what I'm looking for. I do expect a lot of chop, but I agree with you that there's just so little Bitcoin and so much demand that as soon as this thing slips out of the market maker's hands, it's just gone.
Yeah. Well, that's incredible, mate. All right, we'll start to wind her up. Is there anything else that you want to look at right now before we go? I really like what you're saying with the time. That I mean, looking back in time, you get so caught up. Even like the last few weeks when we had a 15% correction, the sentiment was so bad in Twitter and whatnot that with a 15% correction after a bloody 200, 300% run up, it's crazy.
That's what this market does. It's fucking beautiful. I mean, it's absolutely beautiful that it is able to do that so consistently.
Right.
It blows my mind. It can go up or it can go down, and yet it manages to screw all of our heads into the ground consistently. So yeah, before we wrap it up, just share a couple more charts. The charts that I'm looking at on a daily basis. Here we're looking at the Coates moving average, which is available for free on TradingView. I always start with the weekly. I mean, it's actually a really important week because the CMA is giving us a sell signal right here when the LSM crosses above the 2 high. This is least square mean. This is the 2 high moving average. When it crosses above, this is the textbook sell zone in between the 2 high and that LSM. And I expect that LSM to act as support as price gets a chance to kind of cool off. Let's see, something like this is what I look for to be kind of a picture perfect sort of sell zone where it's still bullish, still creates a higher low, but just needs some time to give us that buy setup here again. Looking for some sort of resistance, not necessarily expecting it to take out lows or anything like that, but expecting it to at least kind of move sideways, this is kind of one of the main reasons why I've started to think about consolidation before the halving opposed to after, like we've seen so much in the past. So this is a really important signal one way or the other. If price closes at new all-time highs, weekly close above 73,753, that's a huge buy signal for me. If it closes above this high, it's going to invalidate the sell signal because what will happen is this will close up here and now the 2 high will go up here and now it'll no longer have that cross. For that cross to maintain through close is what I would be looking for. And if it doesn't, it's really a sign of a acceleration to the upside. So I'm going to be paying very close attention to see if that holds as resistance and sends it back down to support around 62.9, or if we smash. These next couple of days are critical, absolutely critical. 3 days from now should really tell much more of the story. And then from there, I look at the EXA, also available for free on TradingView. This confirms these crosses. As we can see right here, it's trying to cross. If I get an EXA cross with a CMA cross, it's very much confirmed. If not, then it's very much wait for the close. And here we see it's trying to cross, but it hasn't. So that's really a strong sign for the bulls.
It did cross. I talked about it on the show. It did cross last week. And then with that great response we had, it has come back. It didn't like sort of print the cross. It was definitely crossed last week. And I was concerned about it. I even mentioned it on the show. But yeah, the response we had off it, it's pulled back above. If you zoomed way in, you'd see that the blue line is actually above the yellow there. Which is really exciting.
Absolutely. And I guess we might be using different exchanges.
Or perhaps, yes.
Looking at is it never actually managed to cross. The blue line stayed at 1.8, refusing to cross.
Oh, just intra week.
Oh, yes, correct. Yes, absolutely. So that's a very, very bullish sign. When it crosses intra-week, fails to close. This has really been my number one way to identify like swing trends, and then kind of longer term corrections that either move or just go sideways, and then waiting for that recross. So this really is a big deal that early in the week, it's only Tuesday, we're already up here. That leaves a lot of time for us to continue to move higher. If it was Saturday and we were here, I'd say like this is a big sell. But being that it's so early in the week and it's refused to cross the EXA, I'm really, really interested to see what happens these next couple of days. It's really, really important. I haven't really been too worried about these candles at all, because on the first one, they didn't even flinch. We were still fully bullish. This one, it started to be like, okay, this is time when if we don't move on this candle here, it's going to be probably a 9 candle move to the sideways or down.
Sock, I used your EXA on the monthly time frame to get very, very long back, and I'm still in those trades. I publicly was talking to Joe Saz, everybody back there, last year.
I'm very glad to hear it. This monthly signals are awesome, really, really potent, and really do a good job of consistently occurring around major lows without needing a whole lot of confirmation. And then again, here we got that CMA cross buy zone, waiting here for it to cross, and once it crossed, boom. I'm really glad to hear that you caught that, because that was a pretty one for sure. Okay, so I'll try to wrap this up as soon as I can. Zooming into the daily. So make myself little notes like here. I'm like, is the weekly CMA going to cross, or are we going to close above the LSM? Just kind of making myself notes from the weekly on the daily. I had noticed, oh, this is a really good sign. We're getting a new fresh daily cross. This can be really, really good for swing trading as well. I pay a lot of attention to this daily new crosses, especially when they're around 0 or under. So really good sign here. And then really good sign to see this LSM continuing to be below full candles. So not even the wicks are getting down there. Really, really bullish. Something else I'm looking at, just kind of along the lines of what Fiboswani looks at with the RSI. Looking at it to support 50 as a sign of like this is generally a really good spot to buy, as when the RSI reverts to 50 in a bull market, regardless of what price is doing. Like here, it could have melted down before the RSI got here, or it could have just kind of gone sideways. And seeing it go sideways with the RSI reverting to around 50, really, really bullish. So looking at this is potentially a good spot for us to just move through the highs and close above the highs, while still being careful to not get overly bullish. So we'll just take a couple looks at MSR, and then I will be done with everything I have to look at. So MSR is my paid indicator that is available on Alpha Analysis, the main tool that I use to identify trends and setups. One thing that has been paying close attention to on this run is that we never got down to the beach. The beach is like the 200 moving average. I'm on a 4-hour chart. That's where I really like to hunt entries and long setups. And as I was showing you before, when we were looking at having at the all-time high, and bulls being left behind, this is a perfect illustration of people like myself waiting patiently for our setup to come in right here, which we have grown to depend on and rely on, and price just not getting there. Instead, it is supporting the 50 beautifully for months to go, let's see here, over a month without testing the 200 moving average on the 4-hour. That's really moving and not taking any time to look back. So as that's been occurring, I've just kind of been having my eye on the beach, wondering if it's actually going to get there. And then it finally did on this last move down on the 18th. we finally got to the beach. So I'll kind of be eyeballing that to see how it reacts. Does it just melt straight through, or do we get a positive reaction? And here we obviously got a very positive reaction. We can see a little EXA cross right here. We can see that price was kind of peaking below the 200, but closing above, kind of developing a pivot off of it. That's looking really good. The next thing I look for from there is kind of 50 resistance to give us another test of the 200. Happened perfectly here. And that's very common when we test the 200, the 50 is going to be up here and it's going to be waiting as resistance. And it's going to want to come together. And this is Tyler Jenks' concept, consensio. Consensio means coming together. So what he talked a lot about was when these moving averages are spread out, we really want to wait for them to come together and in consensio, in agreement, and in a quiet environment. So this is really what I hunt for. Don't really look to do anything with this other than monitor and see if price is reacting how I expect, and then wait for some sort of consensio, a compression between the 50 and the 200, squeezing price to the point where it can't be squeezed anymore. So this is beautiful, absolutely beautiful. And then from there, I would be looking at, here I've got a yellow eye on the sky. This is going to be the area of resistance. It's yellow because I am thinking that it shouldn't hold. It's like a yellow light, you know, green light, red light, yellow light. Yellow's kind of going to be an area for me to trim without looking to really take too much off of the table. And if I'm looking to really take a lot off the table, I'll make that red. So I'm really liking what we're seeing here off of this reaction. It did hold his resistance, but it wasn't able to send price down. Instead, it kind of consolidated sideways. And now we've got the EXA resetting. So I'll be keeping a close eye, and actually I'll go ahead and label that now.
Do you think there's a higher probability that we'll get back into the beach or we'll hit the moon? And you can explain what that means.
I think that after we test it twice, I don't want to see it come back there.
Mm-hmm.
There's still a very decent probability, maybe call it even 50%, 40%, that it comes down. What I would be thinking is that if it does come down again, it will not hold as support. So I really like to see it hold here twice. Now that it's created this new high, I would not want it to give up the 50. Now the 50 is in perfect position to turn back into support. Strong support, 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 and tried resisting it. If it was going to resist it, it would have been here, in my opinion. Now it's in a perfect spot to turn this 50 into support. If that doesn't happen, I would be expecting a move down to like the 50, 55, 56K area. I'm definitely looking for a move into the moon. This is what is referred to as the sky. Middle of the sky is the moon. If it moves into that, it is a big sign of strength. If it resists the sky, it's kind of a sign of weakness, a sign of the bears taking hold. But if it can move through that and get to the moon, it's a big sign of strength. We'll go back here and kind of see being able to do that here was just kind of an early indication that maybe the following move would really have a lot of legs behind it. So yeah, that's what we're looking for now. And I do think it's more probable to go into the moon than to go back to the beach. Last chart will be the 1 hour. Paying very close attention to the 1 hour is still bearish. So I won't be fully bullish until both the 4 hour and the 1 hour are fully bullish. And this is getting about as close as it can get. Right here, it kind of fades out a little bit, but this top part, this is the stop zone. We call it the underworld. If price gets through here, then it is it'll turn into a bull market. It has just turned into a no trade zone because the 50 crossed into the ocean right here. And what I was looking for here, I had my green eye. This buoy level is a critical area of resistance, and here we have the red eye. Was really expecting, looking for that to be strong resistance because it's a bear trend and it's a very critical level. When we melted through that, that was the first big sign for me that maybe a bottom was in. Before that, we were doing nothing but resisting the beach and making new lows and making lower highs. So I was just sitting back, waiting, and then we tested the beach support on the 4 hour, and we were able to melt through this buoy on the 1 hour. And this is where I get really interested in being fully bullish. So I was looking for a reversal of the trend and then a revisit to the buoy. It didn't quite reverse, but it is supporting, beautifully supporting this area here that was supposed to be resistance, got melted through. So this is all looking good for the 1 hour to reverse into a bull trend. And if it's a 1 hour bull trend and a 4 hour bull trend, I am fully bullish, just waiting for that weekly close and with the preference bias of it closing higher, as long as all the lower time frames are turning bullish in confluence.
Fantastic, mate.
I guess the one other thing that I wanted to talk about was everybody's, I think, going very aware of how bullish the Bitcoin ETF is, and they're arguing over it not being as good as cold custody and that sort of stuff. But I think on another level, it's so much more bullish than anyone can imagine, because we have to think about what is the alternative. And what I have been worried about ever since getting into Bitcoin is what happened, let's see, with Executive Order 6102. In the United States of America, they made it illegal to own gold with up to 10 years in prison. And what did they do is they said, like, say the price of gold was at something like, I don't remember exactly, but it was something like $60 an ounce was the price of gold. They make it illegal and say that you got to sell it to us for $40 an ounce. $40 an ounce, or you're going to prison. And that's what happened. They made it illegal for US citizens to own gold, and they made it a law that we had to sell it to them at like a 30% discount. And as soon as they were done buying it all, they just repriced it back to what it was at $60. Go fuck yourself. Sorry. So that is something that is very, very much could happen in Bitcoin. If the government starts viewing Bitcoin as a threat, the precedence is there that they can say it is illegal to own it. And if you have it right now, you have to sell it to us at 30% less than the market rate. And something that happened a couple of years ago is first time ever, they put a little question on the tax form: do you own crypto? Yes or no? So they have a file of who has been dealing in crypto, and they have the precedence of being able to confiscate it. Once the government realizes that they need it and they don't want their citizens to have it, they have the precedence that they could confiscate it from us. So the fact that they are going the route of letting BlackRock, under the Biden administration, they are embracing it. And instead of going the route of putting a gun in my face and telling me that I'm going to jail if I don't give it to you at a discount, they're going the route of promoting it and going on TV and saying, like, yeah, this is the best money the world has ever seen. That fact of them embracing it under the Biden administration tells me that now I'm not worried about Executive Order 6102 happening to Bitcoiners, which could be a bigger risk than anybody has ever really taken the time to consider. So the fact that they are embracing it opposed to going that alternative route tells me that that especially under the Biden administration, that Bitcoin is here to stay for good, especially in America.
That is very interesting, mate. I mean, I hear you. They did it in Australia with our guns. They took them all off us, and now we have nothing to defend ourselves with. But we have Bitcoin. Sawcruhteez, it has been an absolute joy to go through these charts with you today. It's been great to chat with you finally, and I hope you have a wonderful day. I'll link all of Sawcruhteez stuff in the description. I hope you come back for good. I think the world needs Sawcruhteez, so I can't wait to see what comes up next, mate, from you. Thank you, mate.
Well, thank you very much, and I enjoyed it a lot, and hopefully we'll be back in the future. And yeah, you'll be seeing me more on Twitter moving forward. This will kind of mark my return. I made a recent return post kind of detailing everything that's gone on over the recent years. So yeah, thanks for having me, and we'll hope to be back sooner rather than later.
Thanks, mate. Have a great day. Thank you.
Cheers.